All right, give it a couple more minutes and we're going to start the show. Today we're going to talk about banks. The banking problem that you don't even realize is out there. I bet you a lot of people don't even realize it. So let's bring the music down. This is what we do here, folks. The DJ knows how to manage the music. All right, good to see you. Today is Thursday, February 1st, 2024, and we're going to talk about what's going on in China. There's if you haven't been paying attention, and most people haven't, China's been merging many of their small banks because they're insolvent. Like a lot of our banks here are insolvent, but the Fed keeps them going. And so what's happening over there is the winter garden issue, the commercial mortgage business, or the commercial backed mortgage securities. They built all these high rises, condos, and things didn't work out. There are a lot of these commercial developers who are basically owned by the Chinese government have gone under. And they've been kind of covering it up the last year or two. Well, now it's starting to show up in the banking results. A lot of these small banks are being merged, but when you take, if you've got 100 failing banks and you merge them into 20, you still have 20 failing banks. So that's happening. That's been happening in China, and you need to put your ear to the ground, because what I'm hearing is this could be so big that it starts propagating to the United States. And as I mentioned before, there's some other banks, in the United States that are not doing so well. I've got a tool here. I've mentioned this a lot, but this tool is really not going to help you much right now. This is the Weiss Ratings website where they rate all the banks. It looks like it hasn't been updated until November of last year. They updated a lot of this. So this is kind of a historical. It's not real time. They'll probably start crunching the data for the end of December in the next maybe month or two. So to see the numbers here, these numbers are the same the last month or two, couple of months. It hasn't changed. So, but I expect in the next 6 to 8 weeks you'll see some new data out here, and we'll see how it changes. But the real thing to watch is a lot of these regional banks, like PNC, there's a big one here, Citibank, Truist. If you start seeing things in the media about stock prices fluctuating down, or problems with banks, usually remember last year with SVB and Republic, that happened in March. So as we start moving, and that was kind of at the end of a quarter, right? So they can only hide things for so long, okay? That's the way it works in the banking business, is things get hidden when you're hoping they get better, but then once they don't get better, you got to come clean, and you have to start reporting stuff that you hoped you didn't have to. So that's what happens in the banking business, whether you realize it or not. Especially with loans, what they like to do when they have non-producing loans, they give the person extra time to make a payment, or what they'll do is they'll give them another loan, which then they'll apply to their payment to make it look like they're actually paying on it, but it's a net effect of zero, or it actually makes it worse. So things like dirty little tricks like that sometimes our banks will do, and that's not good. So I'm here just to tell you guys, watch out for what's going on in the banking industry as we move towards March and April, because I suspect we may see some things happen. And let's talk about the Fed rate. The Fed rate is under pause again. You saw the market go down like 300 points. Yesterday, was it? Today it's back up. It's like a yo-yo. I don't know. Wall Street. There's a tug and pull going on. Wall Street wants the Fed to lower rates because they love easy, cheap money, and they try to coerce the Fed into thinking that they need to drop rates. But if you talk or listen to anybody from the Fed that talks, the Fed, every meeting that the Fed has, and they're having another one, I think the end of February is when they're having their next one, beginning of March, end of February, beginning of March. They look at the data at that point in time, not before, not after. And they make a decision at that point in time. That's how the Fed works. They do some projections at each meeting, but they don't hold to those projections. They're just kind of a thumbnail sketch of where they're at that point in time. It doesn't mean that if they think that they're going to see a decrease, that they're going to do a decrease. They're only going to do a decrease when they think that inflation is under control. Right now, they think they have it under control, but they're going to wait another month, 2 months to see if they, in fact, do. So they're monitoring, basically, is what's going on right now. Jerome Powell said that, things look good, but he wants that to continue a little bit longer before they take any type of corrective action, such as reducing interest rates, because that if they reduce interest rates too soon, it could cause hyperinflation to kick off and inflation to spike back up, which is what they're trying to avoid. So they're just trying to make sure everything is settled down and inflation truly is heading towards that 2%. I think it's like 3.5 ish right now is where it's at. So they still got a ways to go. And so that means for you and me, the investor in CDs, so the Fed rate is 5.25 to 5.5. I've been seeing rates are kind of coming down to like the 5.25 range. I'm hoping that in the next couple of weeks I can find some CDs out there from some banks that want some money for about 5.3 or above, 5.3% or above, and that's a 30-day term, folks. As I've been looking out past 30 days, the rates are actually starting to go down into the 4.48 range because, the banks are seeing that, hey, sometime this year, probably towards the last part of the year, the last quarter, they're expecting the Fed to bring the rates down to maybe 5%. So as you go, the rates are, that means so the rates are going to be highest for shorter terms. As you go out into longer terms, you're going to see banks offer lower rates now instead of higher rates. So that's where we're at. That's where we're at with the Fed. Wall Street was really ticked off. They really thought that Jerome Powell would send them a signal that rates are going to be coming down this month or next month, and he didn't say that. He did not say that, and actually he's more prone to keep things the way they are as long as the economy's not imploding. So So the message from me to you is watch what's going on with the banks, because as we head towards the next quarter, you're going to see banks issuing their results, and maybe we're going to find some gotchas, some oops, and some realities starting to bake into the banking industry. That towards the end of last year, they started the commercial-backed mortgage security stuff started to percolate a little bit. I just saw an article today where I believe Morgan Stanley sold a property in the West Loop of Chicago at a 90% discount. Yeah, 90. I forget how. Do a Google, but Morgan Stanley had a bank or a commercial property given back to them last year, and they finally found somebody to buy it, and it was at a 90% discount. So that's the type of crazy stuff you're going to see. Let me see if I can find that. Let's see. And it's right, this office building, here it is. Here it is, a West Loop. It's right across from the Willis Tower. Let me see if I got that up there for you guys. There you go. So this is what's happening in the commercial. 90% the last time it was traded, which was 38 million in 2000. The building was traded at 38 million in 2012, and it just sold for 4 million. 240,000 square feet, 12-story building, 300 West Adams Street, which was seized in 2021 with a deed in lieu of foreclosure. There you go. It's 50% occupied, which is terrible. I think I've mentioned before, if you're 30% or lower in open space in a building, that's when problems start to happen. So this is the type of stuff that's happening all across Chicago, all across the United States. So this is what's going to bring the banks down, folks, is the commercial-backed mortgage securities. And it's not reported very much. When these buildings go under or get returned back to the bank, it's not reported in the news. You got to look at the special real estate rags and websites to be attuned to what's going on. But I've been seeing many properties. If a good website is Crane's Chicago Business, will detail a lot of this activity. And another one's The Real Deal, which is a nationwide rag that reports on this stuff quite frequently. So this is happening. You may not see it in the news. Obviously, you're not going to see it on Channel 5 unless it's a really big building that's having major problems, which doesn't happen too often. But this is going to have a major effect on the banks. The cracks are going to start to appear, and things are going to start to fall. So be on the lookout. Be careful where you put your money, and take some action. You may want to have some money real close to you, folks. So that's all I have for now. I'm going to end now. Like, share, and subscribe. Just wanted to bring you guys some finance content. Love to talk finance. Love to talk CD rates. Comment down below what types of things you want me to talk about when it comes to finance, because I'm more than happy to do it. Over and out, DJ Wonder Chrissy, and God bless Donald Trump.